Hey traders, welcome to Charts and Coffee. Hope everyone is doing great. Happy Wednesday. All right, so let's get to it. I'm going to start with the two calendars that we're going to take a peek at. We don't have to worry about FOMC chucklehead speak. We're in that period where they just shut up as you go into that February 1st decision on rates. We'll touch on that as well. By the way, in yesterday's free video, I went into a lot of detail on the macro. You can catch that over at the Simpler Trading YouTube channel. It's over here. I did label the videos wrong. In fact, that video was actually a video that I did on a lot of the symbols that I'm looking at, levels that I'm looking to enter. So I went into a lot of detail. I will post the 1 hour swings. If you check out the Simpler Trading channel a little bit later today, I will post that 1 hour chart video. It's a really good one too. It's a little bit shorter, but you can check this out. It is a macro breakdown. So let me know what you think. Feel free to leave a comment or whatnot over there. And then later on today, I'll post the 1 hour, which is really an important shift that I'm making as we're just dealing with what 2023 is bringing. Is it bullish? I've been talking about that for a few months. I'm still looking with a very bullish bias. However, what time frame are we going to take advantage of that movement on? And that's where the adjustment or even the inclusion of the 1 hour chart to my typical 5 daily, weekly is making a big difference in terms of clarity and setups and having a shorter time horizon, how long we might be in the trade as compared to the daily. So really important adjustment. All right, what are we dealing with here today? Bank of Canada at 10 a.m. has been able to move the U.S. equity markets as we look at what another central bank is thinking about inflation and jobs and overall monetary policy. Heads up for that. That blindsides a lot of traders because in the U.S., we may not think much about what's happening in terms of monetary policy out of the Bank of Canada. Do remember that's a hot zone for us. Next hot zone to keep an eye on, crude oil inventories. We will look for a 5-minute day trade on that in the Sector Secrets Mastery Room. And by the way, what is that setup? The whole idea of that particular setup, and I think we have, I'm trying to remember if we have a breakdown of that in the on the Countdown Trader website. We may or may not. I'm trying to remember if we do, but we'll definitely come back to that. But what I want to do at 10:30 for those of you that have volatility as part of your overall process, keep an eye on those HPMRs. We'll look for the hot zone, the crude oil inventories release, to send price to one level or the other. And we set that up just before the hot zone at 10:30. And that's pretty much it. The other calendar that we're going to keep an eye on is over here at Estimize. All right. Now, speaking of calendar, I do want to remind everybody we have a webinar coming up on the 15th. I'm going to dive into volatility. I'm going to dive into how I'm upgrading some of my classic tools to include more of a volatility reflection. In other words, if volatility is kind of both the bane and blessing of trading, how do we measure it and use it and in many ways protect ourselves from it? So heads up for that. We're going to be talking a lot more about that on February 15. If you haven't already penciled that in, do pencil that in. It's going to be a really big discussion. Super excited about that one. All right. What's coming up today? I'm not going to be trading these particular stocks today, although when I show you that 1 hour chart breakdown, one of the questions I get is, Rog, what if we are 24, 48 hours before earnings? What if we're maybe a week before earnings? Are there opportunities on, say, a shorter term time frame where we could still trade it but get out before the release, which is my recommendation? I do not recommend traders trade the hot zone volatility. It's too binary. It's either the thrill of victory or the agony of defeat. Who didn't wake up watching that every weekend, right? Who was that poor that ski jumper? Y'all remember that? Wild World of Sports? Right. I'm not going to play the thrill of victory, the agony of defeat, right? And that's exactly what earnings trading is. Won't go there. I don't hate my money that much. All right. So as always, gang, this show is about your questions. Keep them coming. We'll dive into them. One other thing that I want to make sure that we take a look at is just a reminder that tomorrow is a fairly significant hot zone morning. GDP. Remember, there are a number of pillars to macroeconomics. We're looking at the things that the Federal Reserve is looking at. And if they're looking at jobs, inflation, and growth, we've got to remember that every GDP, non farm payroll, JOLTS, initial claims, PCE, CPI, even the ISM numbers are going to move what our expectations for, CME group. Come on, there we go. It's going to change our expectations for what the FOMC is likely to do. So, first of all, what are we going to see on the first? We're going to see a rate hike. So, that's next Wednesday. We're going to see a 25 basis point rate hike. And ultimately, I think what's really important, where are we right now, right? Where are we right now? We're in that 425 to 450. We're going to move up to the next step, right? 450 to 475. What's more important than whether or not, whatever happens next Wednesday, which is 97% likely, we're going to see that quarter point hike. Where are we going to be in, you can see the next month, March, 475 to 500. So another quarter point hike. Now the question is, where do we stop? And that's where it's getting interesting, right? And I dove into that in that free video back at the YouTube channel on specifically this conversation. Check that out. I think you'll find that super helpful. But it looks like the probability is still we will peak. That terminal rate will be 475 to 5 or 5 to 5 and a quarter. And that's what I'm going to continue to expect. That's what the market is expecting, gang. Remember, this is the broadest look at what we're expecting. And believe me, the Federal Reserve knows this. It's a two-way street. We, in many ways, as traders and investors, communicate to them what we think is going to happen. And when they need to course correct, for example, every time the expectations drop to 4.5 to 4.75, which is this column here, all of a sudden the FOMC members started talking more hawkishly, and they basically walked us back to a target rate probability that's more around that 5%. So this is an interesting two-way communication device between the Federal Reserve and us. All right. Okay. With that being said, let's jump into our charts and the questions. All right. So first up, hey there, Robert. What are my thoughts on XOM or CVX on the 1 hour chart? Sure. Now we are still in the process of adding more DPMRs to symbols to the DPMR. You'll see we do have Exxon. And a lot of folks were asking me, Rog, is this just HPMRs? No, we've actually changed the color to keep any kind of confusion at bay. And right now, is there anything interesting on Exxon? Probably not at the moment. Not at the moment. I'd say we're looking at probably a level around 111 and 30 for Exxon. I would focus on the long side. Would love to see something like we saw. Now, by the way, when's the last time we even had an opportunity? This would have been 9 a.m., the hour, right? 9 to 10, 10 to 11, where we dipped into the HPMR zone with an oversold stochastic and a neutral environment. I mean, that's just a gift that keeps on giving. We would need to see something like that again, Robert. Next up is Chevron. And, I don't know that I love Chevron. Let's do this. Let me show you something here. Let's do this. Let's jump on over to XLE. Now, XLE is where Chevron and Exxon are number one. Well, actually, number two and number one. Exxon's number one, Chevron's number two. Where is the relative performance here, gang? Keep an eye on MPC, although we have that bonkers candle right there. Keep an eye on MPC. Be really cautious, gang, about oil stocks, because while they are bullish momentum, they are still neutral trends. So yes, in that regard, you might say, Rob, what happens when we don't have those great trends in the daily? We've been day trading. That's been very, very productive since last summer. And we're continuing to focus on those 5 minutes. But what can we use instead of the daily to find those overnight opportunities? And that's where that 1 hour has been really, really helpful. So I don't know that I would focus on oil specifically, Robert, but I love that you're thinking about that 1 hour. That's awesome. All right, next up is the JT multi-trend available on TradingView? Zane, it is. It is available on TradingView, but it has to be activated within the simpler verse. It's a premium tool. So either if you're a part of the Sector Secrets Mastery, cool, that'll be available to you. You can check that out over at sectorsecrets.com. Or it's been included in a number of my classes. And yeah, the next class is no exception. So again, that's going to be February 15 at 8 p.m. We're going to start talking about volatility, but I do believe that the multi-trend is going to be included in the next class. So we include a lot of indicators with the class itself. So if you haven't checked that out yet, yeah, it's going to be included with the class. Or if you're part of the Sector Secrets Mastery, you have access to it. All right. So next up, it's not available stand. Yeah, I think it's only classes or the mastery right now to get access to that. Yeah. And for those of you wondering, Rob, what the heck's what's a multi-trend? So that is this tool. Let me grab my drawing tools here. That is this tool at the bottom of my screen. You'll see these two rows of colors on the bottom of all my time frames. That's structure, gang. That's structure. Okay. All right. Next up is day trading is the thrill of victory only if you educate yourself with proper money management. So true. The holy grail of trading is absolutely and frankly only position sizing and risk management. We call it the holy grail or the market money math. Absolutely. Agreed. All right. Gaps down in NQ and ES. Do I have any plans? I don't prioritize, Robert. I don't prioritize gaps as a general rule, as a strategy. We want to be aware of them, but I don't want to prioritize them per se. All right. So here's where here's where um, here is where. So we're looking at the daily time frame of the ES. Here's our previous close. Here's the open. What we want is, yeah, so here's what I'll do. I would say when we have a gap open, I'm going to be with the Sector Secrets Mastery folks in the room. There we go. So what we're going to do is we're going to track the first 5 minutes of the right after the bell, so 9:30 to 9:35. And if any momentum is revealed during that time, especially in the direction of the gap close, I'm a little bit more interested in that. But structure is going to keep me bearish. Structure is going to keep me very much bearish. All right. So I don't have a buy here unless something changes in the next 15 minutes and we move to a neutral market trend. I do not have a buy on the ES. What about the NQ? Gap down. Yeah, downtrend. And YM. Downtrend. Heck, I'll even look at the Russell. So there is no buy available to me within the context of an overall downtrend on the 5 minute time frame. So it's got to be a short, meaning we'll sell the rip, or we'll just look at other symbols, and that might be looking at something like uh, ZB, which is it might be going into a downtrend too. We might take a look at 6E. So we'll see what the open gives us. We'll see what the open presents us. But what are my plans? I don't prioritize gap trades. I really don't. I think they're interesting setups, but there's still going to be a setup there. I don't believe that all gaps immediately fade, close on the open. And sometimes we have a gap and go rather than a gap and close. And be aware of that. What are my thoughts on the S&P 4 hour chart? Sure. So there's a number of ways we can look at the S&P, right? ES is usually going to be my preference, but if we go to a 4 hour, mm, yeah, nothing right now. Keith, you bring up a really good point, and this is something we will talk about. Um, save the date. um, this is one of the things that we were testing. When I say we, Lorna and I have been testing for about 10 months at this point. One of the things that we've been testing is which time frame right now is giving us really good clarity on the DPMRs, daily price movement ranges. And 4 hour hasn't been awesome. I will say it's not been my preference. The 1 hour over the past 10 months, nearly 10 months, has been testing far better. So 4 hour is something I thought, Keith, I thought the DPMRs, we started off with our hypothesis of let's fine tune the data. Let's go ahead and start to curate the data for the daily price movement ranges so we have accurate time and volatility zones. And then I thought, being a Forex trader for 20 years, let's jump over to that longer term intraday. It did not test as well as the 1 hour. Now that might change in, who knows, 6 months, 12 months, 18 months, who knows? But right now, that 1 hour has been the way to go. So I don't have a rollover on the 4 hour. What I have is a transition. And this is where the multi trend is really invaluable. We had an uptrend Tuesday, Wednesday of last week. And then since Wednesday, Thursday of last week, we're neutral, which means I'm looking for oversold, I'm looking for overbought levels, and I'm looking to fade each using preferably the stochastic. And you can see right in here, Monday, Tuesday, that's what led into the movement lower. That's how important structure is to any trade, even when I have the DPMRs on there. So no, I don't have anything on that 4 hour. But if we switch on over to the one, now let me show you something else. Let's look at the one through the lens of the SPY. You can see market structure very similar. All right. Now what about we look at the lens through the SPX? And I believe we're going to have the DPMRs for both of these. Here's the SPX. I know a lot of people love SPX. Here's the SPX with the DPMRs on there. Again, be aware that what looks to be an uptrend on the SPX, you really want to have confirmed with the S&P. That's a little secret when it comes to trading the S&P. Make sure we're respecting the structure on the ES, and that's going to actually set up, I believe, in a much more accurate way. Experience tells me that if you're an SPX trader, keep an eye on the ES, wait for those zones on the ES, respect the structure of the S, and then go into your SPX if you're writing premium, whatnot, iron condors, then go into that. All right. And then a lot of folks have asked, Rog, I like to play, I don't like to do this, but folks have asked, Rog, what about out of the money options plays? I don't do out of the money options plays, but I have some folks say, Rog, I'm looking at strikes in the zones if I'm playing out of the money, especially when it comes to SPX. So there's a lot of ways we can utilize, whether that be HPMRs or the DPMRs. All right, gang, and just like that, I am out of time. Where does that 20 minutes go? Thank you so much, gang, as always, for being a part of the Caffeinate and Dominate crew. If you haven't already saved the date, please do. February 15th, 8 p.m. It's coming up. It's about 3 weeks away. I appreciate that, Stacy. Yeah, absolutely. If it's moving the needle for you, great. Thank you as always for joining us. See you tomorrow. Same time, same station. All right, gang. Be good to each other. I'll talk with you soon.